Every single ICT trader out there probably knows about the liquidity sweep and fair value gap entry model. But the one thing you probably realize after testing it live in the markets yourself is it doesn't work that well all the time. Now, what if I told you with one little addition at the end, that final golden confirmation, you can massively increase your win rate? So throughout this entire video, I'm going to show you exactly what that is, the particular entry model that you're going to be using, and then also some live examples of trades that have actually been using this entire entry model so you can replicate it yourself as well. So let's get straight into this. Okay, so now we're on the charts. The first thing we actually have to identify is, why does the original entry model not work as well? So that is going to be the liquidity sweep plus fair value gap, and then you set your sell limit or your buy limit. It's going to be as simple as that. But why is it that it doesn't work that well? Well, let's just get into this quick little example. As you can see, GBPUSD over here has now had a very tight Asia range. We've got this buy side liquidity at this point. Again, we have to be very reactional in the market. We cannot predict where exactly it's going to move. We can only prepare our moves once we get to these areas. So as price continues onwards, as you can see, we initially get that first liquidity sweep over here. So that is going to be 0.1. We've got the liquidity sweep. As soon as the liquidity sweep happens, it doesn't necessarily mean anything yet. We have to wait for the next step, which is going to be the change of character. So now we have got point number 2 covered, the change of character. Clearly, as you can see, it's even engulfed downwards as well. So it's actually even closed below here. Now you're at point 3, where you're actually going to pick your entry point. Now the problem that I find with a lot of, basic SMC and ICT traders is they find themselves confused. They don't know exactly where to enter. Is it going to be on the order blocks? Is it going to be on the fair value gaps? Whatever it is, you've got a lot of options. Now, this is why I like to say, whenever you have a point of interest, don't be over specific. Look at the particular area and then just look at the reactions from it. Now, in this particular example, we've got this point of interest here, point of interest right there, and then we've also got some nice fair value gaps right in between. So let's just say, for example, you decide to take the fair value gap right at the top. You set your entry limit over here. At this point over here, once you set your sell limit, and obviously aiming for the other side of Asia range, at this point over here, you have a few confirmations: the liquidity sweep, the change of character, the fair value gap, which has opened up very, very nicely, and then also you're targeting opposing liquidity. So this is your basic entry model of what you would have had in the past. Now, as you can see, as price continues onwards, literally just goes straight through. Now, a lot of you will probably be sat there looking at this trade and thinking, okay, but it was literally perfect. Why did it not work? Now, the one thing we can say is this: you never know where the market's going to move. No one throughout this entire world, even the most experienced professionals in the trading industry, will never know where it's going to move. All we can do is be reactional and look for the best types of confirmations. Now, this particular zone over here where we get these reactions, that's what we're going to be looking at, especially when it comes to the engulfing candles. So in just a second, we're going to hop into the iPad drawings and I'll show you the exact entry model we're going to be looking at. Alright, so as you guys know, I love to draw up, especially a lot of things when I'm explaining things in detail and, trying to show you the entry models in particular. Now, as we were talking about just a second ago, the problem that a lot of traders face is when they get to this type of market structure, where we've got, okay, nice, we've got that nice little Asia range, got liquidity sweep, change of character, pull back, and then continuation like this. You've pretty much got a nice entry model, and there's not really too much wrong about it. The only thing is you're being hasty. You're getting straight into the markets without having that extra level of confirmation over here. So yes, we've got the change of character. Yes, we've got the liquidity sweep. But what happens here, in particular in this area, is going to be the most important factor in terms of our win rate and, really trying to succeed in the markets. So this is exactly what I want you to do. The new type of entry model that I want you to focus on is something like this, where you have got liquidity sweep. Let's say we've got the Asia range over here. As price continues on, gives you that change of character on the pullback. Now this in particular is where we're waiting. You will be looking for an indecision candle around this kind of area. The next candle, when we get an engulfing candle to the downside, I'll just zoom in a quick second for you guys. This is going to be our entry. So this particular 3 candle confirmation is exactly what we're going to be looking at. However, a lot of you are probably going to be asking me now, how do I even enter on this? It's not going to be a sell limit. That's going to be out the window from now on. it is going to be in the form of a market execution. So in terms of the market execution, how do we actually do that? You wait for the 5-minute candle formation to actually form. Once it closes out and completes itself, as soon as it closes, you mark out your stop loss size and everything as the candle is actually forming, and you kind of see, okay, it might roughly be between, let's say, 5 to 7.5 pips. You work out your stop loss size and everything. You enter on the closure of the candle. Your stop loss is going to be here. And then obviously your take profit is going to be at some reasonable zone. Let's just say you want to keep it as mechanical as possible. Let's just say you go for a 1 to 3 take profit system. This right here is exactly what we're going to be focusing on. So let's just break it down in a few steps. It's going to be number 1, liquidity sweep. Number 2, it's all going to be about that change of character. Number 3, pullback to point of interest. And bear in mind, when we say point of interest, it can be anything. Could be the order block, could be the fair value gap, whatever it is. And then number 4, golden confirmation, which is the 3 candle. This is all going to be about the 3 candle formation. Now, one question that a lot of you will probably have by this point is, does it exactly have to be a 3 candle formation? Now, in my opinion, when I started out with this entire thing, I would say this entire entry model I've been working on for probably close to 2 years now, something like that. It's been long gone since I've been doing just the standard SMC and ICT sort of stuff. The 3 candle formation at first was very ideal, but what you realize in the market is sometimes it might be 5, it might be 6, it might be 7. Once you really get to that point where you are literally just consolidating around that area and price is not moving aggressively, you pretty much can see that, okay, volume is reducing, you're probably not going to get an entry. The lower amount of candle formations that happen, the better, because it just shows that price is being very aggressive out that zone and you're getting very reactional price action. Price action. That is exactly what we want to see. We want to see market intention. We don't want to see it consolidating around this area where it's doing something like this. No, we want to see something where it, boom, goes all the way down. That's when we know. Now, obviously, one of the benefits with this type of thing is we avoid any unnecessary losses where, for example, just reverting back to the chart analysis that we did, price looked amazing. You were almost about to get into that trade, but it didn't even turn out that way. So using this exact entry model, take a little screenshot. I'm going to show you now 3 live examples of trades that I've actually been in that prove this entire concept. So let's get straight into it. Okay, so now we're getting into some live examples. One thing I want to point out before I get into all of these, we're going to be going through 3 examples, but with every single example I ever bring out on these YouTube videos, I want it to be from my live trades. The reason is there's a lot of gurus out there that literally just go out and backtest, give you some examples. Yes, it's all well and good for educational purposes, but you also want to prove that you're actually getting into these trades yourself as well. So it's not some regurgitated information that they're just bringing out. Either way, that's besides the point. For every single trade, I'm going to show the before, the after, and then an MT5 screenshot as well. Now, before we get into some other examples, I just want to show you one of the best backtesting platforms out there. And the reason I can confidently say that is simply because I've put in the time as well. Over 10 years of data tested to get to the point where I am right now. And the reason I say FX Replay is genuinely one of the best platforms out there for backtesting is because of the metrics and also the fact that none of it is in hindsight. So you can actually see how it is as if you were live trading in the markets. Now, if you do want to go out and use it, I have got a nice discount code for you. If you use Diamant Capital at checkout, you will get 15% off. So click the link down below and go ahead and put your discount code in. So in this particular example, we have got GBPUSD. Now, just to give you a little reminder, my main 3 pairs are going to be EU, GU and gold as well. These are the 3 main ones that I trade on a day-to-day basis. For those of you that are interested in my live streams, I go live pretty much every single day with my inner circle. So if you guys want to have access to that, obviously it's going to be linked down below. So let's get straight into this one. Asia range at this point over here. We like it nice and tight, so it's consolidating. So it just shows that it's not moved around too much. As we continue onwards, we are always going to wait for London session to hit. So as you can see, once we start to get to this area, it's still around 7 o'clock. What have we seen so far? We've got that initial liquidity sweep right here. So we've got the first initial liquidity sweep of the day. As price continues onward, we are always going to wait for our 8 o'clock time in open. So we are almost there, literally just a few more candles. And as price continues, this is pretty much as soon as London is opening. Now, what have we got so far? We have got not only a liquidity sweep from the top, we also have a liquidity sweep along the bottom as well. When this particularly happens, where you've got liquidity sweeps on both sides of the markets, this might lead to a lot of uncertainty with a lot of people. So you have to look at external factors as well. What other things can we get into play that can actually help us with our decision? In this particular example, what we've actually got is something like this. Obviously, in terms of price in our trend, we are moving to the upside. That's been the trend and that's been the case for quite a while. So we can only assume that we'd love to see a liquidity sweep to the downside as we continue upwards. So in our favor, it would be if we actually bought up from this kind of area. As price continues onwards, all I am pretty much seeing is what? A liquidity sweep. We have got a minor change of character right there. Minor change of character at that point over there. It's not the major point over here. So that must be noted. As price continues downwards, obviously, yes, we do have this massive fair value gap or even this order block right at the bottom for price to bounce off of. All we're going to be waiting on is what? Most people might be entering on, let's just say 50% of the fair value gap, but they still don't have that full confirmation yet to know which way the market's moving. For us, the most important thing is we wait for the fair value gap, we wait for the order block, whatever it may be, but most importantly, we wait for the reaction. As soon as we see that there's a clear reaction to the upside, that's when we get in. So we're still going to be waiting a few more minutes. As price continues on, we are obviously going to be monitoring the 5-minute price action over here. As we continue, price is pulling back, giving us that nice little consolidation. And boom, there we go. As soon as we get a break of this consolidation point right here, we enter with an engulfing candle over here. Stop loss just below the lows. And in this case, just looking back at the trade that we actually entered, stop loss was just below over here. And as price continued onwards, always we're aiming for that sort of 1 to 3 mark. And there we go. So now all that's going to happen is we just let price run. And there we go. As price continues, literally just shoots up all the way straight to our take profit point. And yeah, that is pretty much what the entry model looks like in a real life scenario. Now, one thing I must point, there we go. Hit that 1 to 3 mark. One thing I must point with this entire thing, make sure that you are actually managing your trade. Now, this is feasible because when you are on the 5-minute time frame, you can actually have a look at the charts. You know, you're only going to be there for, let's just say 1 hour, 2 hours max. The exact time that we entered in that particular day was 9 o'clock. And then price hit our take profit during New York session. So you can see with this exact entry model, especially if you stick to the 1-minute time frame, the 5-minute time frame, you don't have to spend all day on the charts just to look for your entry model. So that is going to be GBPUSD, where we made, how much was it? I'm going to be adding obviously the MT5 screenshot, just over 3K on this trade. So yeah, let's get on to example number 2. Okay, so now getting into example number 2. In this particular trade, this happened in literally just the last month. It was a GBPUSD sell, a 1 to 5, and we made just over 3%. So as you can see, screenshots before, after, and then the 6K profit that was actually made on this trade over here. So getting into this little example, very, very simple, following the same type of logic. We had the Asia range open up, which gave us that nice bit of consolidation. But because of market conditions in recent times, we were within this consolidation phase. Now, understand this, whenever we've got a consolidation phase, we always wait for a significant liquidity sweep. Why is that? Because as soon as you get the sweep, you trade away from the actual trade or from the actual position over there. So as we let price continue, we always wait for our London session to open up. Now in this particular example, as London session is opening up over here, we just give it around 20 minutes or so more. And there we go. So just looking at current price action, what have we actually got over here? So we've actually got a sweep of previous daily highs at this point over here. So a very nice liquidity sweep. The next point, so that fulfills point number 1. Point number 2 is going to be the change of character that we've got at this point over here. Point number 3 is going to be what? We wait for pullback at point of interest. So it's going to be as simple as something like this. Many of you would probably identify this fair value gap over here. Some of you might even identify this point of interest up top. For me particularly, it doesn't really matter exactly where we're entering off, as long as we get a substantial enough pullback and then we get that continuation with the engulfing candles. So that is going to be point number 3. So what happens next? We let price continue onwards. Boom, straight into the point of interest over here. And now this is exactly where we slow down and we think to ourselves, okay, cool. We've now had the sweep of liquidity, we've had the change of character, and now we have had that pullback. All we're going to be waiting on is what? The final golden confirmation, which is the engulfing candle. So in this particular example, as we let price continue, straight next candle, and that is exactly what our entry point is going to be at this point over here. And there we go. That is exactly where we get that confirmation. So remember earlier on in the video where I was talking about a 3 candle formation will typically look something like this. Of course, this is very ideal for something like that to happen where it happens in only 3 candles. At times, it might continue on a bit further. This one, this particular example was a 5 candle formation. However, we were very sort of, into it because we saw that engulfing candle happen. And as soon as that completed, that's when we knew, all right, perfect. That's when we're getting into our trade. So as we continue onwards, all we do is we set our market execution at this point over here. In terms of our stop loss, we had it at this point over here. And then all we do is aim for, first of all, our 1 to 3 target. So that's around this kind of zone. But because we saw we were within this consolidation period, this could even be continued a bit further. Because obviously once you get that seek and destroy type of day where you've got the sweep of the highs, you may even get price continue downwards. So once we saw the 1 to 3 be hit, we even extended it up to a 1 to 5. And that is where we took our final profit. And as you can see, price just continued straight to our take profit time. And this actually even happened during one of our live streams as well, even with the last example. So again, guys, with a lot of the examples that I'm giving, it's not just theoretical. These are actually real life scenarios of how to avoid losses and how to increase your win rate. So that's example number 2. And so finally getting into our last example, this is going to be a EURGBP sell that we took that eventually hit a 1 to 5 risk to reward ratio. As you can see, the before and then the after sent out to the group as well. So in this particular example, this was from a few months back, but I wanted to give it because it shows a slightly different entry model, but it works in both occasions. So we've got an entry both for London and also for New York session as well. So as you can see in price action over here, we'll just continue things all the way from the start of the day. Just looking at current price action, what do we have? We have got a sweep of the previous daily highs already. Sweep of previous daily highs. So that is the first little bit of confirmation that we get. Asia range is obviously quite tight and consolidating, so we just let price continue onwards and give us what we want to see. So as price continues, obviously we transfer it all the way up until 8 o'clock timing, because that's always what we want to be looking for. So first example that we actually get into, this one over here. We've got a nice little change of character to the downside once we've had the liquidity sweep of the previous daily highs and also of Asia range as well. So anywhere in this kind of zone is particularly what we're going to be looking at. As price continues onwards, that is essentially where price starts to slow down. And all we're going to be looking at is the reactions from it. Now, in this example over here, we've got our nice 8 o'clock time here and everything over here. Now, the reason why I didn't even enter on this trade in that particular day was just because of the way the candle closed. Now, one little tip that I'm going to give, and this is for the people that are actually watching these entire videos, because a lot of you are probably just going to be skipping through as many people usually do. If you want to enter on the best type of engulfing candle, it must not have too big of a wick, either to the bottom, either to the top. Usually, if we see something like this, where it's engulfed downwards, but the bottom wick is massive, this right here shows you that you're actually entering on a rejection point. So exactly over here, if you look, the body was as big as this, the wick was down there, and then the wick right there. In a way, for me, this is showing that we're starting to reject this area right here. That's why I always want to see a proper closure of the engulfing candle. So just a little tip for everyone out there that's actually watching this entire video. So as price continues onwards, obviously I didn't get into this trade. Again, another wick rejection at that point. So we just let price continue, and then eventually it just had this massive engulfing where I wasn't able to get into it. But again, we've got a nice continuation of structure. So remember, even if you miss your first entry point, it doesn't mean that you're going to miss the next entry point over here. As price continues, we get a very, very nice break structure to the downside. Pretty much all we're going to be waiting on is a pullback to this kind of area. As price gives us that little pullback, as you can see, price gives us a very, very nice pullback all the way up to this fair value gap over here. And the next thing we're going to see is that a bit of consolidation. So if somebody wanted to enter on this trade, where would they actually enter? It would be on this very, very nice engulfing candle. Now remember when I just spoke about we don't want to see a massive wick rejection. If we are going to the downside, we don't want to see a massive wick to the downside. We'd rather see it to the upside. Because what does that mean? This wick just shows you we're rejecting off the top and we're engulfing all the way down. That's exactly what we saw in this particular example. So if I was to enter during London session at that time, it would have been exactly here. Stop loss just above this high over here. And then setting it at that nice and transparent 1 to 3 trade. Cool. So as that price continues, that is the first entry of the day. As price continues onwards, we start to have a very, very nice build-up of liquidity. So what does this actually show me? Whenever we have a very nice build-up of liquidity, especially when we've got a fair value gap right on top of it, for me, it just shows that we're going to get that sweep and that continuation down. And that is exactly what we entered on. So as price started to continue down, again, we got a nice break structure to the downside again over here. And as price gives us that little pullback, boom, that's where I'm now interested in looking for a particular trade within this particular area over here. And you're going to see in just a second how once we get the engulfing candle, and that is it. That is literally our entry. We get that nice engulfing candle, entry right there, stop loss just above the high right there. And then in this particular example, we managed to make a 5 risk to reward trade on it as we started to aim for these lows over here. So as you can see, price just continued all the way to the downside, gave us that nice little 1 to 3 at this point over here, and then obviously extended itself all the way up to the 1 to 5 trade. So in just the last 3 examples, I have shown you how you can not only enter it during London session, you can also do it during New York. You're going to reduce the amount of losses that you enter and basically just be a lot more confident in the market. So one little thing I will say is if you are particularly interested in learning more about this, I have a completely free PDF guide down below. And obviously once you do download that, I'm going to show you all the steps of the strategy from start to finish so you guys can have more of a transparent view of exactly how I trade. And all of that is going to be free down below. However, if you want to watch the next video, just click this one over here where I actually show you my A+ setup from start to finish with more and more examples. As always, just showing more and more live examples. So guys, take care and I'll see you all in the next one.